Hey there, it's Greg with your Spokane Mortgage Strategist. It is Tuesday, August 9th. Time for Greg's home update. Look at mortgage and housing news last week, this week, future. I don't even know what's going on right now, so the future is going to be hard to really predict. Nothing but craziness, volatility, fear, knee jerk reaction, you name it, going on in the old bond market, treasury, stock market, housing world. Last week, all the debt ceiling stuff created so much uneasiness and arguments and unrest that mortgage bonds were the beneficiary, and treasuries, that investors looking to put money in some sort of safe haven while all this goes on. Stocks the victim. Friday, Standard & Poor reduces the U.S. credit rating for the first time in history. So you'd say, well, I would think Monday morning, there goes U.S. Treasury demand and UN mortgage bond demand, since the government backs mortgage bonds. Their credit rating was devalued, then we should have to offer higher yields and there'll be less demand for our debt. Well, just the opposite. Super high demand for mortgage bonds and U.S. securities yesterday, today. Stock market again getting killed the first day yesterday, and continuing from last week. Continued to tank after the Fed said we're going to continue to keep interest rates low, and we expect very slow growth through 2013, middle of 2013 anyway. They've never talked about keeping rates at a certain level that far out, so stocks didn't like that news, but they did end up kind of bouncing off the bottom there and recovering later in the day somewhat. Bonds having a great day as well, both mortgage bonds and stocks having a great day in the same day. Pretty rare, but it happened. So interesting. You would not have expected mortgage bonds to be the beneficiary of a credit, the credit rating being lower, but it to be that wasn't just that. It's just all the fear and stuff going on that was going on with Greece and Europe, now going on with Italy and Spain, and so it's kind of the lesser of the evils. The U.S. Treasury is still considered a very good, safe investment compared to the other stuff going on in the world. If Europe was doing really well, probably be a different story. But mortgage rates, looking to buy, sell, refi, fantastic time as far as cost of money is concerned. Obviously, a good time in terms of housing prices. Still phenomenal buys out there. So, hope that helps. Have a great week. We'll see you next Monday, Tuesday, or Wednesday, one of those days. Have a good week.